Happy. What day is it today?
Happy Monday.
Happy Monday.
Happy Monday. Yes.
Happy Monday.
Yes. Start to the week.
Yeah. Start of the week. We're in Q2. Q2, second quarter. What is happening? First of all, I want to know what the difference is between Q1, what interest rates were happening then, and how interest rates have inflated. Obviously, we know that the war has been affecting all of this. What's the difference as far as what was the lowest interest rate in Q1 versus what we're seeing today?
Yeah, there's been a big shift. And everything has to do with what's been going on for the last month and a half. We all know, we've been talking about it. You know, this entering the war in Iran has really affected the 10-year Treasury yield. Not just the 10-year Treasury yield, but as we know, inflation across the board, right? Things that we use every day, gasoline, groceries. So we're all feeling the pinch. The first quarter, things were improving. We were seeing actually rates as low as for FHA, VA, 5.25 in some cases. Wow. Really competitive, right? Because every scenario is going to be a little bit different. Every client's going to have a different rate depending on their credit score, depending on their down payment, the type of property they're buying. So all these things affect the interest rate. But I was able to get 5.25% for some of our clients.
Wow.
So that was the lowest point we reached probably in the last 24 months. And that was a big dip. And we were all expecting it to continue because that's really what all indications were from, let's say, the government down, right?
But didn't we hit 4.99?
I think you could have gotten a 4.99, maybe with a small buy down, like, maybe a point hit. Yes, some lenders were promoting that type of interest rate. Wholesale lenders, not retail. And we've talked about that too. That's important, right? To understand why retail lenders are going to be more expensive. Retail lenders being banks, credit unions, wholesale lenders being brokers, overhead costs go into those interest rates. So when you go to a fancy place that has 1,000 buildings, 10,000 employees, you're paying for that with your interest rate. Some way or another, they have to cover the expenses. And how do they cover them? By consumers that are getting the interest rates. So you have to be real smart about that, right? Why would you go pay more for an interest rate to cover the CEO that has a salary of $20 million a year? And you're going to essentially get the same VA product, for example, or the same FHA product, because it doesn't change. It's not like you're going to go buy a car and it's a Lamborghini versus a Honda. It is the same product. A VA loan is a VA loan whether you pay a 7% rate or a 5% rate. The difference is, where are you getting it from? Are you getting it from a retail bank, or are you getting it from a broker, wholesale lender?
Absolutely. So I think this is the reason why it's so important that our consumers or our audience that are watching is to come in and sit down and actually dissect, what they're working with, because working with Fiducia Home Loans, we don't have that overhead that we're paying, exponential amount of dollars for. We actually tailor a product that is also negotiable with seller credit to buy down, to get down to that 4.99, if anything. We really need to take the time to sit down with our clients and actually help them map out what they're looking for and be monthly mortgage driven, and rather than focusing on the interest rate.
Absolutely. And so this quarter has been, started rough. Obviously, we finished the last quarter entering Iran, the war, and then inflation kicked up, and we started seeing it across the board. So this has been a tougher second quarter, but we are already seeing an improvement. Okay, so one of the graphs we're putting up right now is going to be the 10-year Treasury yield, and we've talked about that before. That everything's attached. 30-year mortgages are attached to this 10-year Treasury yield. So what you're seeing here on the screen right now is you're seeing last week's 10-year Treasury yield, and as you can see, it started at 4.35, and it dipped all the way down to 4.27. So that was an improvement for 4 days. It went down, and that's when we started hearing that there was going to be a 2-week, what they call it? They were stopping the war for 2 weeks. I don't know so that's where we're in right now, right? That there's like a 2-week break, and so immediately you start seeing an improvement on that 10-year Treasury yield, and even the stock market went up. So what you see here in this improvement, you're going to see better interest rates. Now, it's not a huge change in a week, but it's an improvement. We're heading the right way, and hopefully it will continue to head that way. Now, as far as this next graph we're putting up, this is what you can expect for a 30-year conventional rate across the nation. Why do we do nation numbers? Because that's typically what we get when we go and look at Fannie Mae numbers, Freddie Mac numbers. They don't do it per region, they do it across the nation. So you're seeing that if you were looking at a 30-year average, 6.44 was on Monday, and it went down all the way to 6.32 by Thursday. So it followed the line of the 10-year Treasury note. So that's why it's important to look at these things, right? How do we come up with a rate? Well, there has to be a place where we start off of. That's the 10-year Treasury yield. And then we add the cost into, build in the cost, and this is what the consumer gets, the building cost plus the base rate. So we are improving. Hopefully it will continue, but I would say that it's a very volatile scenario because it all really depends on what's going on right now globally and especially in Iran. So as you said, there's other options. One of the options right now is the buy down option, which you negotiate very well with our clients, with the sellers. So I think there's still ways around getting good interest rates with the right strategy and negotiation.
Absolutely. So if you're thinking about getting into the market and interest rates are scaring you, we've got some good news for you. It's not the end of the world. We can definitely get you in with negotiating strategies. So next time you're thinking about buying or selling, come and sit down with us and check out what options you actually have on the table for you.
Yes, absolutely.
Thank you. Happy Monday.